Hello, everybody, and welcome to the Plus3 Futures and Commodities Show. My name is Ben Maldonado. We are recording on Friday evening, the 28th of October. As always, I'm here with my partner, Barry Hederachi. Barry, how are you today?
I'm doing good.
Yeah, it was a great week for the Bulls. And on today's show, we're going to cover all the big five with Barry, which is ES, bonds, gold, crude, copper, dollar, and the euro. And then when we flip back to me for commodities, we're going to do it's a very short list, and we'll talk about why. But we've got silver, crude, and natural gas. In the meantime, in addition to NQs, which we cover every week. In the meantime, it's not going to take us a long time to talk about Bitcoin because the sideways continues. Yes, we had a little bullish move. Couple days ago, we had a decent bar finally that pushed up right on the timing cycle there, the half square. Essentially we're still trapped in this range that we've been in for, since mid-August. No signs of it breaking yet. It's pushing a little bit, but in reality, all we did was basically move an eighth of a square. And it shows you the levels that this thing, the volatility's gotten squeezed out of this thing, that an eighth of the square was actually active compared to previous times. So we just got to wait and see. The big markers are the full square up here at 24.6, 24.7, something like that in that area. And then down here, the half square, which is around 15,700. All these levels, by the way, are on a Google Doc spreadsheet, which we update, and we will post the link to when we post the link to the video. So for now, that's, it's just Boringville here in Bitcoin. So we're watching to wait for the next move. Still think it's going to be, down into this box here, 9,000 to 12,000 to sort of finish up this correction. So let's jump into the big five because that's where all the action is and was. Let me throw it over to you and let's get on it. A, B, C, D. Is it easy as that?
Sometimes. Sometimes it's easy. Well, here's the A, B, C, D that Ben's talking about. And that was just a potential target because we were looking at this to be a low. And well, ABC is no fun unless it actually stops there. So, and of course, that whole mystery is hanging, till Monday or Sunday night.
Yeah.
We'll see how that plays out. Start off, if you guys haven't, if you're new to the show or if you didn't catch last week's show, I would say to catch last week's or maybe the week before, like the last 3 or 4. So you're up to speed on the whole, how we thread all the charts and the stories every week. And also, if you like our work, click the likes and maybe share and also turn the alerts on so you get notified right away and we'll get going. That was a reminder, right? That's the only thing I had to remind people.
Yeah.
So just to make a quick recap, we saw a low, we had a bunch of cycles that expired right around the October 3rd. And this we counted in real time as a false break. So the initial low on the 3rd would hold. And if that was the case, we were looking for some kind of a rally. And initially, if we could hold 36.19 level, which we held above nicely, right? And then we were looking for the challenge of the 38.25 level, which we had. And barring that, Thursday night crazy, but we ran right back up there today, and we closed right at pretty much at the target for the ABCD, what the ABCD pattern gave us. And I think last week we talked about, listen, if we get through 38.25, we're probably going to go up and tap 39.40, and depending how price behaves, maybe even higher. So now the key thing is, any kind of a pullbacks we have, if we're holding above this 38.25 to let's say 38.50, this box here, then markets, we have to respect the technicals, and I would say the markets are on a bullish footing. As long as we're holding above that on any kind of a counter trend, and that's 38.25 to, let's say, 38.50. As far as upside targets go, well, we have 39.40 as one. And after that, we have this 40, let's just say 40.40. How about that? That's pretty much the story. And last week we talked about why, I spent a lot of time talking about why there's reason to believe that we can run up if we don't get stalled at 38.25. So you guys can catch it on that show.
And it tested that multiple times during the week. There was some serious battles in that area.
Yeah, there were some serious battles, exactly. And then it would just jump, right?
Mm-hmm. Mm-hmm.
All right, let's go on to the weekly chart and take a look. So on the weekly chart, and we're looking using the square 52, which is a weekly square. Listen, the next resistance on this is around, let's say 39.80. So we have room to run up until then. Lows came in okay. Everything's in place. And here's basically the trend line for, that we might have to go up and tap. So up until we get through that, general weekly trend is still down, but here we're trying to catch the counter trend, which we got the low, and here's a run up. And 39.80 seems to be the next level based on the square. And that's all I have for the ES. Not much, really. I mean, we might get all kinds of fireworks next week, but for now, those are the levels to watch. As long as we're above this, I think there's room to run. And the next level to be above would be 39.40.
Mm-hmm.
Meaning if we break above this, any kind of a pullback would have to hold above that. For now, we're kind of stair stepping. So this is the next step. So we'll see how that works out. Moving on to bonds. We came down, we took out this key level at 270 degrees. And so bonds are basically on a really weak footing under that square. It's around 124. And the next major support is around 112, let's say 112 and a half. Up until then, I think it's more of a sell the rallies kind of a story here. Easy.
Mm-hmm.
So it seems. Let's see.
You always get nervous when it seems easy, right?
Yeah, of course. So here's the one of the reasons I'm a little bit confident is we have that 114 as the main support coming off the high, and that's 144 degrees down, and we have 144 weeks coming into December sometime. We checked last time, this middle of December. So I'm guessing, we might do a couple of counter trends or consolidate, but that would be like an ideal target to get to. 144 weeks is a big deal in the bond market, in a lot of other markets. So I think that's why I'm a little bit confident saying, yeah, I think short side is not done yet.
Mm-hmm.
Not that it's going to be finished here, but that's just what's next on the horizon, right? So
Right.
Mm-hmm.
It's sort of the next road sign on the highway.
Exactly. Moving on to crude, being kind of quiet. The main thing is it's holding above 83, and 91 is resistance. So we've been there for a couple of 3 weeks. We've been, we're boxed in. The long as we're boxed in like this, it's kind of a positive boxed in. So it's easy. We could break out to the upside.
Mm-hmm.
Because we're making higher lows. So we'll see. And we hit on oil every week. So if the basic idea now is, we're holding above 83, and this is what we mean by holding above 83, right? We came down here one day, reversed the next, held above 83, and now we're trying to get up to 91. We'll see how that goes. Taking a look at the weekly, pretty much the same story. We had support here coming down into that low. It's in a positive sort of it's on a good footing. I mean, if it was down here, it'll be weaker, but here it's firm, and it supports a run up at least the $100 here. That'll give us a ABCD up, maybe almost maybe up into here. So that's what we're looking at. Not much. It's kind of a wait and see thing, but we know it's on firm ground, so it's not that tricky, long as it's above 83. Gold, again, not much different from last week. We're pretty much back to where we were, after this test. 1646 is the level we're watching, and this is not a carved into stone. It's just a good number to watch for the balance. So you can see, if you look at the price action since we reached the price in September, you can see balance of it's on above it, right? So that tells me it's so far it's positive. It's good. You know, accumulation could be going on. It's in a good spot. Now, for some reason, if we get under it and get stuck below 1646, then I think gold probably have a lot more to go, maybe 1500. So it's a critical spot to hold if we're going to move higher. But through all of this, it held on pretty well. You know, this last month, if you think about it, since September, we've held above that 1646 fairly well, given all the stuff that's happening in the world. So
I've got weekly support at 1638, so right in that same area, right in there.
Yeah, right there.
Yep, right there.
And if we look at speaking of the weekly, if you look at this, it's even more interesting.
Mm-hmm.
Well, we had that ABCD come down. I don't know if you guys can see it. It's this dashed line. And we tapped it twice. We did it last week and a couple of weeks before that. And this week we made a higher high and a higher low. It's all okay. It's I would say it's not negative. But the bad news on the weekly chart is, as long as we're under 1695 level here, it's 180 degrees up from a low way back. We looked at this a few weeks ago. So long as we're below this 16, let's say 95, 90, let's say 1598, it's in a weak spot, Ben. You know, like it's not gonna, it's hard to get out of that hole. And the good news is once we crawl out of this thing and settle above this level, then I think it's kind of opens up the whole new level.
Yeah.
But now we're holding below that, so it's a little soft and slippery. So we'll have to watch it if you're going to do the long side. Short side, I'm not sure this is the best time to be shorting gold, especially since the daily's holding on fairly well to that balance, right? That we talked about.
Mm-hmm.
Now, if gold slips under that, then we have some room till 1500. You know, that could be a trade possibly, but up here it's still okay. And the 1676 we've had on the chart for a while is really kind of capping that. See, last week we just couldn't break through that, and we're holding 1646. Super, you know, it's a very tight box. See that? It's right there.
Mm-hmm.
So not much to do for now. Copper was more active. 330 was a level that we wanted copper to hold above, and it did that. You know, we had this test last week, and we did a little ABCD off of that, looking fairly good. It's holding its place, waiting for time. Is it in a weak spot? Not necessarily, because this July low was okay, from what I remember, and it's really the 90 degree that we need to get above somehow at some point, which would be these highs. So we'll have to wait and see how that works out. It's not exciting. You know, it's kind of like Bitcoin. The good news is this 90 completed. So I think it's possible that we can consolidate in here between, let's say, 375 and 325. That could be the 50 cent sort of arranging.
It looks like it's marking time, waiting for the next cycle to hit, doesn't it?
Yeah, that's exactly what it's doing. So it's just a matter of waiting it out. I mean, even this 90 didn't really do much, right? 90 to 90 didn't do much. So it's kind of waiting. And best thing to do when they're waiting is leave them alone.
Yeah.
Again, this waiting thing with the balance to the upside, we're holding above the weekly 90 degree line, which automatically holds it above the fork for now. And the weekly 90 is around 338, pretty close to the 330 that we were looking at on the daily. Well, 330 would be down here. It's okay for copper. It's a good range, but at least it's on top of the 90. Positive for now, but yeah, not much action. There's a triangle building up though, and that's pretty this could end up being bearish. So we got to keep an eye on this.
Yeah.
I don't
Could
wanna,
be a fourth you're in right now on the way
Yeah.
down.
Yep. And we can go down, hold up like this and just flush down into maybe the 50% here.
Hmm.
Well, that would be really good. Good spot to start trading it. But
No
here
question.
we gotta wait either till the triangle sort of gives out or to see if it just chops right through it. So we'll have to wait and see that.
Hmm.
Dollar, we marked out an ABCD coming down last week.
And there it is.
There it is. And if you guys didn't catch the section on the dollar last week, we talked about, this lower high coming in and why this is a good short. And so we got that part out of it. Didn't quite get to the, 50% of the square. That would have been ideal.
Which also shows some strength, by the way.
Yeah. I mean, it's 109, let's say 109 versus 950, so about 50 cents off. But it changed the trend. We did head down. We took out this low that was made during that cycle low, October 3rd.
Hmm.
And for now, I think it's on firm grounds. Like 107 is our key level to change the trend completely on the daily. So we're well above that. And really, if it consolidates here, either we're going to test 113, and if we can get above, then we have much higher to go. Otherwise, we'll consolidate here and we'll have to see how it plays out. But the fun part, I think, for now is on pause. This was good. People made money. And now it's time to sort of take a pause and see what happens next. So I wouldn't call this entirely weak, but it was weak coming off of here, coming off the square.
Hmm.
And it would be nice to have it come down and test the square so we can sort of see what happens here. That would give us a lot of clues. And looking at the weekly dollar, oh, I should call it slow motion dollar, right?
Hmm.
So all right. So well, we got under the we had that close right at the 180 last week, and we talked about that. And the 112 was right there. And we talked about why it's important to be able to hold above that if you're going to go higher. Couldn't do it, slipped under. So, weekly, this is probably not the place to buy right now. So it's one of those, let's just wait. At least that's my take. You could maybe trade the short side, but there's support nearby, so it's a little tricky. Now, when the weekly rallies up and stalls at 112 next time, that might be a good spot for a decent trade. This lower high didn't quite hit any numbers, although the high did. So that was the first spot, and we looked at that on the daily. Took out the 112. We're stuck below that now. So it's just not I don't know. It's not an easy spot to trade off of on the weekly. So we want to see it come up to 112, get stuck, or get down to this 107 area down here and find some support. For now, it's weak as long as we're below 112 basis weekly. All right. Then we have the euro
back in the box.
Boy, but that was a good run up, eh?
Hmm.
Mainly I'm saying it's a good run up because we went up and completed the ABCD.
Yep.
That we had drawn out last week. The dollar didn't quite get to it, but the euro did. It's just a reflection of that. I think it makes sense. So for now, the box really is the resistance level. And for this whole thing to turn around, I would say, based on the square, I'd say this 98, let's say 98, 98.80. Let's say 99, about that. So 99 area should be support. If we come down here and we hold at the half square, that would be positive. That would set us up to go up and test the full square, which is about 102, 103, 102, 102.5, something like that. So that's what we're looking at. Either so since we closed in the box, it's a little tricky at this point. We're above the half square. So yeah, it's a little positive. It's a little firm. And what's the upside? Upside is up into the full square, 102.36, let's say 102.3. That's the upside potential. Support is around 98, let's say 98.80. And we're right in between. And anything you want to add to that, Ben?
Just that if you look to the left, we spent a lot of time chopping around in that box. So
Yeah,
it's got to clear that before it can really get going.
yeah. Either we're going to break down below the half square,
Mhm.
and if we do that, I would say, we have a lot more to go. So watch
Yeah.
that.
Right.
Watch that. If
Mhm.
we hold it and runs up to here, well, that would be the next major resistance. So we'll work it out like that. We
Agree.
did break the major. We did break the trend line.
Mhm.
Just broke out of it, but not that it means anything. But things to notice, right?
Sure.
The main thing is we had that big cycle ending here, so we can't ignore it. And we had the 90 in the dollar. We had the 90-week cycle, which is a big deal. And
Mhm.
I brought it up at the time. So we had the same 90 over here. Right
Yep.
there.
Mhm.
And so we can't forget that, as long as that's why, I talk about this. I've been talking about this every week. Long as that's in place, we can't really, we have to note that in the sense that it's possible that we have a low in place and we have to trade it like that. And we had the first pullback that came in well, and we came up 3 weeks off of that. So next couple of weeks will define the trend here. So we got to watch this carefully and trade it accordingly. Now, currencies after a run like this, it's possible that we get into a range like this, like a big wide ranging kind of price action. So we got to be careful. This was all easy money, so now we have to be careful not to get caught into this, and we'll do that.
And look it's a perfect example. Look what led into that.
Yeah, like that. Big
and then look what came out of that.
Mm-hmm.
So you get these dull periods where you're just going to get chopped up if you try to trade.
Yeah.
And then on either end of it, you get the great moves.
Yeah. So you can see here, everybody got smashed through here, came down, did the false break. Right.
And then took off.
We did that. Yeah. And then eventually higher lows we talk about all the time, and took off. Nice trade.
Mm-hmm.
And then we spent a good amount of time here.
That's like 6, 7, 8 weeks, right?
Yeah. More. So we don't want to, after a trend, we know we can expect something like this or something worse, something like that. Right. Something like this up here. Or look at this. Remember this kind of a crazy kind of price.
That's the screw everybody action.
Mm-hmm. So I'm just reminding people, right? We just had this nice leg down. We had 90 weeks, not like we didn't get any signs from the universe. So we know now that we got to be careful in here to make sure we don't try to jump in and, trying to be a hero.
Mm-hmm.
So we'll watch this and see how it goes for now. I think that's all I have. We're good. Anything I should touch on, or we're okay good to go?
I think you're good.
Yeah.
It's a good review.
Yeah. What markets? Markets are just, I have friends calling and asking, do you have any idea what's happening? And I'm like, no.
That's a loaded question, right?
It's a loaded question. A lot of people are having a very difficult time, but if you just watch the levels and follow the cycles, at least you can, map your way through the technicals.
And you keep from getting chopped up as well. That's the key. Yeah.
And try not to, when there's so many different data points coming at you, it's so much easier to just lean on the technicals and trade instead of trying to figure out. I just had a friend stop by asking me about that. Like, he was telling me how he can't just keep up with the fundamentals. It doesn't make sense. But I said, listen, it's not supposed to make sense.
Not at the time, because it's discounting something in the future, and that's what throws people.
That's right. So I explained why technicals help. That's the only way. It's the only real thing that we can count on, and we know it's something we can measure. We have a past, we have history, we can check it out. So times like this is much better to just lean on the technical side and trade than trying to somehow make it kind of a mental project, right?
No question.
So anyway, let me put it back to you. We'll get going.
Okay.
All right. I see the NQ. What's happening there, Ben?
Well, as you can see, it's lagging compared to to ES, right? ES made a higher high than off the pullback. And here we had a big snapback today from the big down yesterday, but we're still making a lower high so far under the trend line. And we're stuck in this half square still. Last week we talked about, 11,280 was the key number. Below that, and we were going to go test the lows here. Above it, and we could push up towards the full square. Well, we're basically right in the middle of the full square and the half square. 11,900 is the top side. So could we push up next week, take out these highs and tap this? Yeah, but until we get above that, we're just stuck here.
Right.
The other thing to note, some static time counts. This was a high to low on this last leg down into the June lows. If we do the same thing, but a high to high, takes us to November 2nd, which is Wednesday, Fed day also. So we got that coming in. Again, this, until we break this trend line and until we break this full square, I'm not super sanguine about the prospects for the NQs here. Any other comments you have to add on NQs?
That makes sense. Also, I would say to watch that half square under it.
Yeah, for sure.
Yeah.
Yeah, this is key because if we lose that, we're testing the lows and probably taking them out. So let's see. I mean, look, the great thing about the market, right? We had crappy earnings on the key stocks that everybody owned, and yet it rallied hard. I mean, you got to love the market. That's what keeps you guessing, because when you think you have it figured out and the bad earnings, they're going to tank it, they rip it. It's such a great thing, to have to deal with. Right. Before we jumped into the three commodities, I said we are going to follow. One was silver, one was crude, and one was natural gas. I want to show a chart that I put up a couple times on Twitter this week for ES. This is the weekly.
Oh yeah.
I've been watching this thing for a long time, and it really caught, the downdrafts. This one came before it, but look at where we just pulled back to.
Yep.
So to me, this is a major decision point for two reasons. One, the circle, right? So the next week's bar, since this is a weekly bar, is going to be right here, right here.
Right.
So if we start printing bars outside of here, you can see what happens when you drift outside of this. You get moves up. You either follow it down on the outside or you escape. Escape. On the way up, there were these escapes. On the way down, it's been more following the arc of the circles.
Right.
So we're at a really key spot, in addition to being at a full square. Right within an eighth of a full square. So this is a major decision point, and it could usher in, without any cycles or anything, this is just geometry, the fast move down along this arc. Yeah. Just like we had here. So this bears watching. I put the cycles, the bigger cycles I'm looking at are calling for early January low, and this arc down to this half square would hit right at the end of this year, beginning of next year.
Right.
So something worth watching. I know people were interested in that chart when I put it up, and here's just a little background and a little how we use these sort of things.
Right.
I know you're big on the circles, Barry. Anything else to add educationally for people to watch relating to these?
Well, we're just watching it is the base thing. We want to see how that resistance comes in. We want to look at other methods and time cycles to see if anything else supports that. And if you have enough confidence, you take the shot.
That's right.
And this doesn't happen all the time. So when it does happen, there's a high probability. So you got that going,
Yeah, I mean, if you look, the last interaction with this arc was, June, July, August.
Well, it was enough to trade if you just traded it.
Yeah.
So, and the one before that was actually a fairly good trade.
This one.
No, the one after.
Here.
Well, nope. Come down one more. Okay, go up one. Okay, across. Across to the left. Yeah, right there. coming
Yeah,
off of
this
that.
is coming into that. I
Yeah.
mean, it's a perfect example how you bang up against it and then you roll over.
Yeah.
Bang up against it and you roll over.
Mm-hmm. That's
And
it.
so here we're banging up against it. The big question, do we roll over? Do we break through?
Yeah. And you
If
got
we
to
break,
watch out either way. There's no question there. So
yes, if we break through, something else is going on, right?
yeah. Yep.
You break through, then you got this next level up, almost 4,200
Right.
for a half square.
Mm-hmm.
And you got a lot of open space here in terms of the arcs and the circles.
Yeah.
Where you'd have no impediment. So we'll see. It's a critical spot to say the least.
Mm-hmm.
All right. So I wanted to share that. Let's jump in and look at some of the commodities. Not many. And before we get to the commodities, the reason why is a lot of them are, as Barry was showing when he was going through his big five, big six type of thing, a lot of them are, they hit a key point and now they're chopping around, or they hit a key point, bounced, now they're pulling back, and there's no clarity on what the next move is going to be yet. We don't have an edge yet to enter or to say, hey, we want to get involved. And it's sort of this, the vibe I got when I was looking at all the charts and preparing for the show was there's like one more push down, one sort of deflationary scare yet to come in these commodity markets. And you can say, well, what does that mean, and what does that mean for equities and bonds and the dollar and this and that? It's hard to say, but if you put the puzzle together with the cycles and what the charts are telling me and how the commodities are acting, there could be a whoosh, one more whoosh down in the commodities before those things put in lows and are ready to go. And you don't even need the cycles or anything to do that. You look at the charts, you can see they're in a spot where it could go either way, right? We could have another push lower, take out those previous lows, or we could make a higher low, take out the highs and take off.
Right.
And as you were saying, Barry, the key is watch price action, watch the chart, watch the technicals, and pay less attention to the news or what the talking heads are saying, because they're going to be saying things that'll probably throw you off what the next trend's going to be.
Mm-hmm.
So let's jump in here. Now, why am I looking at silver? It looks like, oh, we're going sideways. We've been in this downtrend. We have been in this downtrend. There's no question since this March high, we've been trending down. But if you look since late August, early September, we're starting to get something that hasn't happened in quite a while, which is higher lows, higher highs.
The big triangle.
Right. Another higher low here, right? And then we pushed up. And here's what I really, really liked. We ended the week above that full square.
Right. Nice
and
pullback.
Yeah, and it pulled back, tapped it, and pushed up a little. So this point here, if we take that out, it's up and away in silver. So if you look at the high here, 21.31. The half square is at 20.77. So as long as we hold this full square, I'm watching to see on a lower time frame, do we get a reversal? Can we get involved with a good risk reward that, hey, if we're wrong, we know where to get out. And if we're right, we have the possibility of taking out these highs and then really going. And it's this pattern of a low, a high, a higher low, a higher high, and another higher low that has me really interested in silver. We know where we'll be wrong, right? If we take out this half square, this full square, we don't want to be around. And certainly if we take out these lows, we don't want to be around,
right?
Because then it's got more to do. But it's an intriguing pattern. One of the few commodities where we're not seeing, lower lows and lower highs, but we're starting to see the opposite take hold. Anything else to add here on silver?
Well, I think the break is going to be something to watch. So let's hope it breaks clean. It's compressing. It's been a couple of months of compression, so it is important to watch here.
There's a big move coming. There's a big move coming in silver. Let's go to the next one. Barry talked about crude. And crude is another instance where we have a fledgling low, high, higher low, nice reversal. Look at where that low came in, right? Right on the full square.
Right.
Just what you want to see on a pullback. On the
Mhm.
first pullback, we stopped at a good spot, gave us a higher low. We reversed up. Now this half square is super key, right?
Mhm. Mhm.
92, 93 area.
Right.
You take that out, it's off to the races. It's up to the full square here, 104, 104, 105.
Yeah.
So this is it's a fledgling pattern, but again, you're looking for these kind of signs when you're trying to catch this corner, right? We had the low, push up, stopped where it should, and then the higher low came in where it should as well. So
Mhm.
it's slowly but surely checking the boxes. And that's important. I wanted to show another thing on crude, why the area of the high this week was super important. Here's your weekly. See where we're banging up against here?
Yep.
So the 89, 88, 89 level is really, really critical. We get above that and sit on it, there's the platform to go.
Mhm.
The low came in good, right? Half square, right on the timing of the full square. Now we've been battling this past week with this high here. We tried pushing up a couple weeks, couldn't hold it. Now we're coming back up and testing it from the underside. If we get stuck under here, it's got more work to do. But if we can get up and get on top of that weekly full square,
Mhm.
then maybe we're looking at a low to high cycle here into June, July with a move up here. So anyway, I wanted to throw that weekly in because I thought I want to give people the context and see why that level right there is so important.
Right.
80, 89, 90 area, 88, 89. Got to get a weekly close above that, and then the weekly kicks in as bullish.
Yep.
Lastly,
Worth watching, that's for sure.
oh yeah, yeah.
Mhm.
Yep. And lastly, we're going to go talk about the Widowmaker.
Mhm.
Haven't talked about this one for a while since over in here.
Mhm. And
But
then when
what
the
if,
high came in.
yeah, and when the high came, yeah, we called the high when it came in. But this, I'm talking about this is it's a bullish setup again on this, right?
Mhm.
We've had this big move down off of that high, 144 degrees off a high, which in that gas, it likes these 144s, the 180s. It makes big runs. So we did 144 at this low, and remember this trend line was drawn in on this low in just late December, early January, and look where we stopped,
Yeah. Look at the bounce off of that.
and look at the move off of it. So now what are we looking at? We've got the first push up. Couldn't got above the half square. Basically it almost gapped above the half square here.
Mhm.
But then we've pulled back. We closed right on the half square. So what are we looking at? We're looking at where does this first pullback stop?
Mhm.
Does it come all the way down to the full square, which is in the like 518, 520 area?
Mhm.
Or does it battle here in reverse? So I'm dropping down to the 4 hour and saying, okay, give me a nice reversal, and you can get involved in this because the way this thing moves, once it turns bullish, it turns bullish. So it's not there yet, but the reason I wanted to show everybody is the setup is there for a potentially bullish move in that gas off of this, this first push up, this pullback. Now we got to see what comes next.
Mhm.
Some of the key levels on the weekly and the monthly are in the 570 area.
Mhm.
As long as we're above 570 on a weekly basis and a monthly basis, you're sitting on top of like a full square. So we closed at 580, which, again, is above that magic number on the weekly monthly. I'm watching this one this week to see how this pullback plays out. Is this just another lower high and we're going to make a lower low? That's possible. But I want to watch it based on where the low came in and how the reaction we got off that low. Right away, it closed up on top of this full square, and then we had a gap up right there.
Mhm.
So let's watch Nat Gas. It should be on your radar right now. Thinking that we're definitely early, but we're thinking right now the hypothesis is that this is a low, and if we can get a higher low showing in a good area that's technically sound, like this pole square. I mean, look what it would be sitting on top of over here. This whole structure, for 3, 4, 5 months.
Right.
If we pull back and then reverse, Nat Gas could be making another run. They don't call it the Widowmaker for nothing, so you got to be careful, and you got to make sure you have a proper setup with a good risk reward. But this, when I was looking at the chart, I was like, wow, I like the way this looks. It's acting like this was decent low, good push up, first push up. Now we got to watch this pullback. Anything else to add here on Nat Gas, Barry?
No, you did a good coverage. We're good.
Okay. That's it. I do think, as I said, the commodities in general were talking, when they were talking to me as I was looking at them, it was another push lower, some sort of temporary deflationary wave coming in, which could fit with, this cycle of potential panics that we know are coming up in November. So it's a time to be cautious, but it's also a time to look for opportunity, because opportunities will present themselves when the markets get chaotic. And that's kind of what we're waiting for, using the levels, using the cycles to try and get on the right side of that chaos when it hits. What are you looking at particularly this week, Barry?
Well, next week's a key week. We got a lot of stuff going on. So basically, the 6 watch we talked about, I'm watching all 6 because they're all at key levels. We have to see if the S&P can hold these key levels, and if we're going to get to some of these targets that we talked about. Bonds might get a spot to short if it rallies enough and sets up. So bonds are really important to watch. Dollar's important to watch in here. Gold, not so active, but it's good to know if we're going to break one of those levels. Copper is kind of holding its place. Just want to make sure it continues to do that, or gives us some other sign. But silver is going to be on my list for next week, because that's a very interesting
setup.
Yeah, that you pointed out. And
we have Fed meeting Wednesday of next week.
Yeah,
with the announcement and the presser, and we have a little thing called an election on the 8th. So a lot of events that are timed coming when major cycles are coming. So I don't think it's going to be calm and smooth. I think it is going to be chaotic, and the markets are going to reflect that chaos. And we're trying to get prepared for it and find the levels in the markets that are starting to show signs of, setting up for a way to, with a good risk reward, take advantage of the chaos.
Exactly. And next week, I think if Fed, Wednesday, so, it's possibly run up into that and hit some of those levels we talked about, at least for the S&P, and we'll see how it reacts after that. But either way, we're set up, man. We're set up to blast one way or the other. So we got to watch it close.
Amen. Well, great show, Barry. Good job on your review, and we'll see you this week, everybody.
All right. Good job. Thanks. Bye-bye.
Bye-bye.